Folks, another small-scale gold producer has reported their financial results for the third quarter. Mako Mining is the latest small-cap producer to report. And well, the results weren't that great, if we're being honest, due to some regulatory delays that resulted in poor production numbers. What was great, however, was the CEO's response to the numbers and the openness to which he talks to investors, both via the news release explaining what happened and his willingness to speak to investors on social media rather than hide from the results. We're nearing the end of our Q3 earnings coverage. Folks, we're talking Mako Mining, we're talking social media and mining stocks, and we're talking Q3 earnings, baby. Let's dive in. Let's start off at the high level. Mako Mining in the third quarter posted top-line revenue of $15.7 million, an increase of 47% on a year-over-year basis from $10.7 million. The figure, however, pales in comparison to the record $28.3 million posted in the second quarter, which represents a sequential decline of 44.3%. The weak performance on a sequential basis is attributed to a delay in receiving a permit, which impacted the mine plan at the San Albino mine in Nicaragua, Mako's only producing asset. But more on that later. Cost of sales for the quarter totaled $11.2 million versus $8.1 million last year, leading to a gross profit of $4.5 million, a 70% improvement from the $2.7 million on a year-over-year basis. After exploration, G&A, and other expenses, Mako posted a net income of $400,000, or 0 cents per share, for the 3 months ended September 30th, 2024, versus a loss of $1.5 million, or 2 cents per share, in the third quarter of 2023. Comparatively, in the second quarter of this year, Mako posted net income of $8.8 million, or 13 cents per share. Adjusted EBITDA totaled $4.3 million for the quarter, a 42% increase from the $3 million figure a year ago, but it was also a 71% decline on a quarter-over-quarter basis from $14.6 million in Q2. After a debt repayment of $1.2 million related to a Sailfish silver loan and a $1.5 million repayment on the Gold Source bridge loan, Mako Mining ended the third quarter with a cash balance of $5 million versus a balance of $6.7 million at the end of the second quarter. Mako also spent $1.6 million during the quarter, repurchasing 619,000 common shares. All right, let's look at the performance of the San Albino mine itself. In the third quarter, Mako mined 2.1 million tons of ore, which is flat on a sequential basis. Tons milled came in at 51.9 thousand versus 52.7 thousand in the second quarter. The big difference here, however, is the grade. While grade-specific data was not provided in the release on a quarter-over-quarter basis, gold production during the third quarter totaled 5,100 ounces versus 12,000 ounces in the second quarter, which basically says that the grades were shot during the quarter. All-in sustaining costs during the quarter also skyrocketed, jumping from $10.98 an ounce to $23.83 an ounce during the quarter. Average realized gold prices, meanwhile, climbed from $23.49 to $24.70, which basically saved the company from taking losses on every ounce they produced. But that figure doesn't include deductions from a gold streaming arrangement in place with Sailfish royalty. This, however, is where CEO Akiba Leisman deserves some credit. Why? Because he was blunt about it. He basically said grades sucked this quarter because of a permit delay for the Las Conchitas EIS, which was finally received at the start of the quarter. With receipt of that permit, the company had to strip 1.3 million tons of waste material to get to the good stuff. On an AISC basis, $607 per ounce was attributed to this pre-strip activity. The remainder of the increase was attributed to lower head grades at the mill due to only 14% of mill feed derived from diluted vein material, as opposed to the typical 50% blend. This pushed head grades as low as 4.2 grams per ton. In a comment on CEO.ca, where Akiba is very active, he basically referred to the situation as being a double whammy. Things are said to have leveled out in September, with head grades improving 85% through the first half of Q4, with recoveries and the average price of gold increasing by 10% each as well, setting the company up for a stronger fourth quarter. He's also been very open about how he calculates mine operating cash flow and adjusted EBITDA, and well, that there might be some M&A in the works. Dude's an open book. What more could you want? All right, so let's wrap it up here. Was it a good quarter? Well, Mako had some problems, that's for sure, but they still posted a positive net income, and that's still better than some of their peers. So the company deserves some credit for that. And year to date, they're still operating cash flow positive to the tune of $18.5 million. So they seem to know what they're doing. In the real world, things are sometimes choppy, even if that's not what investors want to hear. The ability to deliver over the long term is what's really important, and Mako, from that perspective, hasn't disappointed. All right, everybody, we're almost done earnings season. If there's any stories you want us to cover, please let us know in the comment section. I promise we read all the comments and we're going to try to get to the stories we can. I thank everybody who has liked our videos, subscribed to our channel, and shared our content. And guys, if you have any feedback for us, please let us know. Thanks for watching.